What's up, everybody? Welcome to another episode of the Stock Bros podcast. My name is Tony. Today we're going to talk about Tesla and is Tesla overvalued? But first, please subscribe, leave a like, leave a comment, and also check out my links in the description below. I started my own course on Udemy, Financial Literacy and Investing 101, to help teach you the ABCs of investing, how the stock market works, and all of the terminology you need to know. And right now it's on sale, so check that out. So let's get started. Like I said, we're going to talk about one of the most frequently asked questions I hear about online. Is Tesla a good buy? Is Tesla overvalued? Now, this is one of the trickiest stock prices to evaluate, but we're going to do it right now. And I'm going to give you the good and the bad that comes with Tesla. So let's start with the good. Last week, Tesla released its earnings reports for the first quarter of 2021. Now, if you don't know what an earnings report is, check out the previous video I made explaining them. So in the first quarter of this year, Tesla had some record-breaking numbers. Tesla's net revenue was $438 million. Tesla had a record 184,000 in car deliveries, and they had a record earnings per share of 93 cents per share, beating the 79 cent per share that was expected. Now, Tesla also has a very low debt ratio of 0.25%, which means that they have 3/4 more cash and assets than liabilities. So that's really, really good. Tesla also has plenty of cash on hand and free cash flow. They currently have over $19 billion in cash. Not $190 billion, $19 billion in cash. The other thing to remember is Tesla has a solar division as well, and they generate around $500 million in revenue this quarter. So the other major ace up their sleeve is Tesla has something that no one else has, and they have Elon Musk. So the Elon Musk factor can't be overlooked. He's one of the most polarizing, influential CEOs and social media figures of our generation. And he definitely moves the markets and moves the share price. So there's a lot of really good that comes with Tesla. Now let's talk about the bad. Is Tesla stock overvalued? Well, according to many financial metrics, it is way overvalued. So we're going to get into some of those. I'm not going to go into too much detail on what these metrics mean because I've already created so many videos explaining these. So check out the earnings report video or the how to research a stock video. Those videos will explain in detail what these metrics mean. So let's start with the price to book ratio. This ratio simply compares the company's market price to its book value. Now, investors recommend a 3-to-1 ratio or less as being good and a 1-to-1 ratio as being very good. So Tesla's price to book ratio is 29.5 to 1. Very high. The industry average for car manufacturers is 1.6 to 1. So Tesla's about 27.5 times higher than average car manufacturers' price to book ratio. So that's pretty substantial. The next thing is the PE ratio. Now the PE ratio is just comparing a company's market price to its earnings per share. And Tesla's PE ratio is 1,092. The industry average for car manufacturers right now is about 22. So 1,092 to 22. This means that if you bought every share of Tesla, every share, it would take you 1,092 years to make your initial investment back based on Tesla's yearly earnings. So that's pretty substantial. And what these two metrics tell me is that Tesla's stock price is incredibly overvalued, but Tesla's not a bad company. It's just their stock price is incredibly overvalued. And that's because of the Elon Musk factor, like I said before. a lot of new investors, millions and millions of new investors that really don't understand financial metrics. They're just jumping in and buying this just strictly because of Elon Musk, really. Now, the next reason why it's overvalued is because the earnings reports are also a little misleading. And I'm going to tell you why. Yes, Tesla had record net revenue this year, but over $500 million of those sales from the revenue are from government credits. If those government credits stop, it'll be very interesting to see where their sales go and if they decline. Also, as more and more cars get into the EV markets, it's going to be more and more government subsidies being spread out. So it'll be interesting to see if those subsidies keep going to Tesla as well. Now, another thing that I found pretty funny about their earnings is over 100 million of their revenue this quarter was from sales of Bitcoin. So unless they're planning on becoming a crypto exchange and selling Bitcoin every quarter, they're going to have to find a way to replace that $100 million now that they reported for this quarter for every quarter. So that's something that's going to be a large task. Now, even though Tesla has a solar division as well, they were hit pretty hard this quarter, and they took a $200 million loss from quarter 4 of 2020. Plus, they raised their solar panel prices by 50%. So as you can imagine, there's going to be a lot of angry customers. So it'll be interesting to see if those sales decline in the future based on that such a huge increase in prices. I would say my final take is that Tesla is still a front runner in the EV technology world, but they have many competitors on their heels now, and you have Volkswagen, Ford, GM, and others that are making massive investments into their EV divisions. So they're definitely going to be on their heels, and it's just a matter of time before they catch up. And like I said before, we had a huge influx of new investors that flocked to Tesla. They caused their share price to increase by 700% in 2020. So that's part of the biggest reasons why it's overvalued so much right now. So one question to ask yourself before you buy Tesla is, do you see them being able to sustain these prices? And also, do you see Tesla remaining the top EV manufacturer for the next years or decades to come and beyond? If so, then maybe Tesla is a buy for you. Maybe you want to wait for it to drop a little bit. Tesla is not a bad company. Tesla is a very good company, but their share price is just insanely overvalued right now. I know some may disagree with this, but based on the financial metrics, it's hard to disagree that it's not overvalued. It's also important to remember that Tesla is not just a car manufacturer. So comparing their numbers to the average for car manufacturers is also a little misleading, because they do have a solar panel division and they are in other things as well. So that's also something to consider. So that's all for today. Thank you for your support and thanks for watching. I appreciate it. Until next time.